Crypto trading can be exciting, but if you don't manage risk, it can also be very expensive. The first rule of responsible trading is simple: have a plan. Before entering any trade, decide how much money you're willing to risk, where you will buy, and where you will sell. Without a plan, emotions like fear and greed will control your decisions. Second, protect your account and your funds. Always use strong passwords and enable two-factor authentication. If you use crypto wallets, never share your seed phrase and be careful when connecting to unknown websites or dApps. Third, use stop-loss orders. Markets move fast, and you can't watch prices all day. A stop market order can automatically close your position if the price drops too far, helping you limit losses. Fourth, avoid FOMO. Just because everyone on social media is talking about a coin doesn't mean it's a good investment. Always do your own research. And finally, be careful with leverage. Leverage can multiply profits, but it can also wipe out your entire position in seconds. At the end of the day, responsible trading isn't about getting rich quickly. It's about managing risk so you can stay in the market long term.